All right, we're live. Let me fix this. How's it going?
You're live. Here you go, Roy. It's your show. Bye.
Take it
Oh,
away.
no. A little under the weather today, just like the market, but it's another good day to be here with you guys. If you're new to Bootleg Weekly, we have a few specific topics. Specifically, we're going to be talking a lot about SoFi, some about the conflict ramifications for oil, VG, Palantir, and a few other names, air test systems, and a few other things as well that will probably sneak in. And towards the end, we will have our question and answer time. That doesn't have to be related to anything that we're discussing, but we will always shoot you straight. So sometimes that answer is we do not know. In fact, quite often with me, less so with Tevis. Tevis, how you doing today?
Is that the expression "shoot you straight"? Because that sounds wrong to me.
If you lived in Texas, it would be right. You're
Yeah.
just too gun-averse being up in Canada, I think. So
I guess. Because I thought it was just shoot straight, as in like you aim and you shoot straight, not shoot you straight. That's like very. Anyways, doesn't matter. Semantics. But I'm doing
I've
good.
heard it both ways.
I'm doing good. Happy to be here. I booked a little bit of travel for myself, so I'm gonna be gone for a little while. Off the grid. Just kidding. I'm still doing YouTube, but relatively off the grid. And I fly out tomorrow.
Nice. I fly out tomorrow too.
Oh, for yeah.
The Robinhood event. Yeah. Excited to go do that. It's a quick turnaround, like 2-day trips. So
It's very exciting. Look at us. I also got this for you. I went to the convenience store 5 minutes before the show just to get this for you. Haven't had a Celsius in a long time. So we're going to do that just for a good old time's sake.
Yeah, this is an old one, actually. So it's empty. I didn't want to be left out. I might have to grab one at some point. Yeah, so one of the interesting things with the Robinhood event, and we're going to get into probably SoFi here or the conflict, your choice in just a moment, but they've snuck a couple of things in there. So there's a lot that's happening with the Robin Chain testnet, which is really interesting. I don't know that they'll break down too much into that, but it's something that they allude to back in their summer event, and I'm very interested in. Like they're in the process of building essentially 3 platforms, which institutions can shift volume. Other businesses can actually be on there as well. So, what's very clear is there's going to be something related to custodial assets, the Trump accounts, that sort of thing. And why I'm really interested is not just as an investor, but I use the product, and I have a 13-year-old, and she was actually talking to me this week, wanting to invest a little bit of money that she's earned by selling some things on Etsy. I'm like, all right, let me see what this thing is at Robinhood, and let me get back to you. She's homeschooled, so the nice thing is we can incorporate that as part of their curriculum and give her a little matching bonus and stuff too. So it should be fun, just a little bit of money. But I remember doing something like that when I was in the 7th grade, and it really helped me understand just a little bit, enough to be like, okay, yeah, there's something interesting here that when I had time, I'd be interested in getting in that space. So it's fun.
That's amazing. That's fantastic. Are you excited for the event?
Yeah. Really excited for the event. It's always kind of hard because the biggest thing that I enjoy is getting to talk to all the different people, fellow retail folks, analysts are there. There's lots of people for Robinhood, of course. So I spend the whole time talking to folks. And there's always like ridiculously amazing things to do. Like it's a party type of event. And I probably won't have time for any of it, which I mean, like, don't feel bad for me. It's a great time, and I prefer talking to people, but yeah, it's always a good time at Robinhood events. Hopefully you'll make it to the next one. So I invited you. Next time you can be my +1 if you want. So, but you're going to somewhere else. It's fine. I see how it is. All right. So let's get into it.
Yeah, I reached out to them and I was like, "Hey, I would love to come to this event," and they just didn't respond.
Yeah. I mean, there's probably no difference for you between that and being my +1. Like I don't get any perks. I'm staying thankfully with Amit. He let me stay with him. Got to pay my own way, Uber my own way, pay for my own food, that sort of thing. So, but yeah, it'll be fun. All right. So, do you want to start SoFi, or do you want to start with the conflict, the broader market, and energy defense names?
We can start wherever your little heart desires, Roy. This is
All
your
right.
show. I'm just a guest in it.
No, not at all. Our show together. Let's do the conflict in that case, just as a kind of intro, and then SoFi next. So, of course, over the weekend, yet again, the conflict with Iran started, and initially, of course, it looked very gloom and doom. As far as I'm not talking about the politics. I'm not talking about any of that stuff. Just the impact on the market. That's as far as we go on this show, but. As things seem to be like, okay, maybe this isn't going to take quite as long as expected. The market, of course, rebounded Monday. Did Monday surprise you at all? Because I actually thought that we'd probably start red and we might finish just barely green or essentially flat. But all the high beta names just ripped. Like my main account was up 10% that day, over 10%.
Yeah, I mean, people are buying the dip, man. I think people know overall that this is going to be fairly short-lived. I mean, the dude was dead on day one, and then his replacement on day two, and then it's just like every replacement that they've named since. They're, from what I'm seeing, is like the army or whatever army they did have is wiped out, and I don't think anybody's going to be like, thinking that this is going to be like a multi-year affair or even a multi-month affair. I mean, Trump himself was like, hey, it's going to be over in, 4 weeks max. And that's very different from when Russia said, hey, it's going to be over in a couple of days. It's like, this is actually a couple of days. So I think the market can see through that. Yeah, oil is obviously going to spike because, when you close off like the only passage, which actually makes it really interesting, the Venezuela thing in that context, because it makes it more premeditated as a geopolitical chess move versus two isolated incidents. But yeah, everything that I'm seeing leads me to believe that that this is going to be over really soon, which is actually really interesting, right? Because I checked Polymarket today, and they have this poll called Iran regime change by June 31st. I'll pull it up. What do you think is the percentage on Polymarket for the regime change? Or will the Iranian regime fall by June 30th? Okay, that's in what? 1 month, 2 months, 3 months, 3 months.
It should be like 92% or something.
92?
Yeah.
Yeah, I mean, look, that's a pretty close wager. It's actually at 39%. Isn't that wild?
Yeah.
Like, that's 4 months out, and you're telling me that's at 39% chance, and like earlier today it was at 24% chance. Like, I would imagine it was much, much higher. Much higher.
That's pretty crazy. Didn't expect that, but Trump gave the timeline of 4 weeks, but we've heard timelines in the past that ended up being much, much longer. I think that's what the market is maybe a little bit worried about today. We saw, initially things were fine, but just kind of deteriorated towards the end of the day. A lot of names faded that were up early. Even energy actually faded too. Trump had announced. So with the closing of the Strait of Hormuz, a lot of ships are just sitting there. It's too long to go around the Horn of Africa, the Cape of Good Hope, and it's Horn of Africa. That's right. Anyway, so in insurance, anyway, if they wanted to try it, would be significantly different. So a lot of things to work out. Trump indicated that the U.S. military might be able to escort these tankers through, just to keep things moving, and that maybe they would offer some sort of government insurance as well. That seemed to actually kind of stabilize what was happening in energy prices. Of course, the only name that I have in that is VG. And so VG, of course, had earnings yesterday. It was like, did you see any of the VG news yesterday?
I didn't see any of the news. I saw the stock price because you showed it to me, but that's all I know about VG. I don't know nothing about nothing.
Yeah, so they had like 3 really positive catalysts. And one, I wish, that everything was stabilized and over and this didn't happen. But the biggest one of those is yesterday, Qatar mentioned that they were actually closing off their LNG plant. And they have the most LNG out of anybody. They have an insane field, insane production as well. Their costs are very, very low. Like they're number one in the space, and they will be probably indefinitely. United States also, is very good. But they ended up saying, just because of what was happening with Iran and all the different stray shots that are hitting across the Middle East, that they're going to shut that plant down, which immediately spiked prices. One of the things that VG benefits from is they have a good chunk of their contracts, like any of these type of companies, in take or pay contracts that are just kind of stabilized, that they're producing this amount and this percentage is going to those existing contracts. But they usually benefit, so they are actually less locked up than most companies. So what that allows them to do with the extra is play the spot market between what's here in the United States and the spread over in Europe. Now, the European markets compete as far as the spot market with the Asian companies as well, which are impacted also by Qatar. So this basically spiked the prices substantially. At the same time as they had earnings came in better than expected as well. Guidance was maybe just a little bit more conservative, but everything else looked really good across the board with the plants that they're spinning up. Everything's on schedule, on time, and on cost as well. And then they ended up also hearing back from the Dutch courts on one of the arbitration cases, which was with Shell. And the court basically was like, yeah, you guys, Shell, you appealed. Sorry, you're done. Get out of here. So I'm like, oh, man, they had like triple catalysts all in the same day. They were up like 20, like between that and after hours when they had that last catalyst, the Shell thing announced. I was like, they were up like almost 40% in the day. And okay, this is great. One of those reasons I wish didn't happen, but the rest, So they ended up fading quite a bit just because, again, the stability that Trump gave with the potentiality of resuming some of the flow there.
Yeah, it's incredible price action. I mean, we were talking about VG back in the $6 range, $7 range in January. And lo and behold, a couple months later, it's double that. You, of course, did buy VG multiple times on stream. So,
yes.
So that's
this stream.
So
I think it was 3 times, Tevis, like 3 weeks in a row. It's like we Matt or maybe somebody just mentioned VG. I knew enough about it, but it was in the 20s when I last looked, and I was like, it's $8. Yeah, I'll buy 100 shares. And then the next week, it's $7.32. I'll buy 100 shares. $6.58. I'm going to buy 100. And so anyway, got some money in, thankfully, in December, and a lot of that went into VG and Air Test Systems, which they've been treating me well, man. It's it more than makes up for PayPal being a big stinker. So
yeah, let's check in on PayPal. Actually, let's see where PayPal is trading at.
Yeah, I've removed that one off the active watch list just because I don't want to be the guy that. Like, I really do wish remaining shareholders well, but if I see like PayPal like pump 12% and all my stocks are down, like I don't want to be like jealous or anything. I don't want to be that guy, so I don't look very often. But
yeah, PayPal is $46. Let me just share my screen with you guys. Here you go. $46 for PayPal. Been sort of climbing back up to close the gap here at 51. Let's see, VG is just insane moves. From $9.70 gapped all the way up to $11.50, and then jumped all the way up to $13.50 and got rejected all the way down. What is going on? Actually, let me check out next.
Yeah, that's what I was curious about. I think that you closed this position.
Yeah,
it looks like it did get a little bit of the bump. It's of course not really in the active production like the other place.
This is what I closed it at roughly. I think I closed it at 545 or something back in end of December. Like 535. So it's not that bad. It pumped at 6.5 and then it just got rejected again.
Yep. Yeah, and I don't trade oil, the commodity or companies, but of course those are doing well. The other name that I hold that has done very well in this environment is of course Palantir. And whenever there's like they're such a deep moat. Like one of the things with it, Tevis, is like if things are really stable and good, it's a high beta stock and it tends to do really well. If there's conflict, and I prefer there not to be conflict, but there is conflict and chaos, Palantir thrives in that environment. So it's like, okay, what environment would Palantir like really struggle in as a business? And there isn't one.
Well, Roy, like, let me tell you, okay, because
Team of Palantir, okay.
People are vibe coding Palantir over here, and software is going to zero because of AI, and Palantir is absolutely going to zero. Look at this. This looks so good.
It is pretty cool. I'll give you that.
Public information, and yeah, somebody basically vibe coded this entire thing.
Yeah. There were a couple, I think in the original one, like some people that I think were being serious that were like, wow, that's Palantir. And it's like, oh, guys.
I mean, you should be concerned.
What's that?
Are you concerned?
No. It's a UI with public information. It's like, so actually, speaking of vibe coding, one of the funnier things that I saw actually, and I wanted to do a video. I hope that I will. I don't know that I have the voice to do it before I leave, but was on AI specifically that, like we heard last year, the argument that if they get into quantum computing or something like that, then all these cryptocurrencies could potentially be compromised, which really isn't the case from what I understand. If there's an expert out there, you can certainly correct me. I'm no expert here, but the argument, at least that I saw this last week, was, okay, well, you can just vibe code Ethereum. And it's like, do you not know that literally there's been exact copies of Bitcoin and Ethereum already? The value is not in the code itself at this point. It's in the trust. It's in the ecosystem that's developed. It's in the distributed nature. It's in the 100% uptime. A brand new, even though it's exactly the same as far as the code, is not the same any more than a real genuine United States $100 bill is worth $100, and the fake, but that's identical other than just little letters that say, for movie or whatever, it's worth very little.
Yes. Yeah, it's kind of crazy, man. I don't know. I feel like I have different thoughts every week on vibe coding. It's honestly, man, like I feel like Steve calls me like every day now with regards to like stuff that he's building and stuff that he wants to build, and like it's so exhausting to keep track of everything because you can do so much, and all of a sudden you can get this like paralysis because of the fact you can do so much. Like your eyes are open and your possibilities are not shackled by technical limitations, and as a result you're like, oh my god, I can do everything, and then you end up doing way too many things all kind of like half-assed.
Yeah.
Why does my eye look like that? Anyways, so yeah, Steve is building. I love this. Steve can build an application. SaaS is dead. Steve is building applications, and they're pretty good too. And I know multiple people are doing the same.
Yeah, I mean, like there's a lot about SaaS that's actually not dead and strengthened, but there are chunks of SaaS that are they're dead. Yeah, and there's others that mostly like that's overstated. There are a few, kind of like I think it was Chegg when OpenAI came out, that used to be there for tutorial support for students.
Yeah,
that went to like I think it literally went bankrupt or went to zero.
Like zero.
And there's some SaaS plays like that where it's a UI basically with public APIs, nothing special about it really. Yeah, but a lot of it, I think, like the baseline for a lot of SaaS is maybe less acceleration in the future because there are some things that are repeatable, and there's a few that have really deep moats that'll look great. But yeah, I don't know that it's. Today doesn't feel like we've hit the bottom yet, so could be wrong.
Yeah.
So
I mean, it looks like it's going to trade maybe in like a little range for a little while. I don't know. The market in general. I mean, I think the catalyst is, of course, like looking to see if this news is going to end. I think we also have like payrolls this Friday. There's a whole bunch of like macro catalysts over the next couple of weeks, but like the idea is that we're going to chop up or down, and then hopefully by end of this month or beginning of next month, we start making our way higher. Obviously, that's the optimistic view because we could also just be due for a couple legs lower, especially if we have escalations here. With regards to the oil, it's interesting because they're like, okay, like the Navy is now going to take control of the strait and they're going to control what goes in and out. And it's like, okay, great, that sucks for China.
oh man, I didn't even think about that.
Yeah, because like 80% of China's oil apparently flows through there, something like that. And now the U.S. doesn't have the same oil restrictions because they have Venezuela. Because Venezuela was one of China's biggest trading partners for oil, and now after what happened, I think they lost that connection, and now they lost Iran as well. So, I mean, like, if you're gonna tinfoil hat it, I would say that's probably the wider like strategy.
Yeah.
I don't know.
SoFi, there's a couple of pieces of news with SoFi that came out. One that you and Tanner kind of broke a while ago when you had your interview with Anthony Noto, and it was an insider buy, third insider buy this quarter. Anthony Noto bought $1 million worth, 56,000 shares. Not his largest buy, but the interesting thing is, the follow through. He said March 1st, if it's there, there's no material, non-public information, I'd like to be a buyer. And we saw him come in. The other thing, and using your product, the paperpanda.io, I don't know if you saw that video, but I was like, yeah, this is Tevis's tool. Let's use it. Yeah. And the cool thing is, there's never been a single time when Anthony Noto bought that he didn't also buy again in the same quarter, usually within 2 weeks. So doesn't guarantee that there's another insider buy. I think it's extremely likely, however.
I mean, the main thing that I'm looking out for is like the caveat that he highlighted. He's like, obviously, if I'm buying, it means that I don't have any material non-public information. And we know that SoFi raised a lot of money in 2025. And the speculation is to acquisitions. And so if another purchase does come in 2 weeks from now, I'm like, it's not going to be some earth shattering, oh my God, Anthony Noto bought. It's more going to be like, okay, well, he still doesn't have any material non-public information. So it's going to pair expectations a little bit for an acquisition, I would say.
Yeah, for sure. Now the other is, and you made a video on this as well, the MasterCard stablecoin news. I guess, what is your take on that first, Tevis? And I think I have a little bit different take than what you have, but that's okay.
Yeah, I think look, he mentioned in not only the chat that we had with him, but in multiple interviews that the strategy that they wanted to go after for a product expansion in 2026 was their own stable coins is going to be a big area of focus, and then also business banking. And I think that the stable coin in MasterCard's network and in all the businesses that MasterCard deals with, I think that's going to be good advertising for SoFi's brand. I think it's going to open the door for more collaborations from other companies with SoFi. And then I think it also opens the door for business banking down the line as well, because it just puts SoFi on other companies' radars. And so overall, like, I think it's obviously bullish because MasterCard is a massive brand and they have a big network. But I also think it's bullish for the cross-selling abilities that it allows them to do.
Yeah, I think it's, I mean, obviously it is a bullish thing, but it's, some people, whenever there's news and you don't fully understand it, you're like, this is huge and it's massive. Well, this, just like to give some context, and you're not saying this, I'm just clarifying for anyone that might be in doubt or have seen some of those takes. This is not an exclusive. So it's not saying, hey, MasterCard is exclusively going to use SoFi USD, but instead it's added into the ecosystem. And there's a lot, in here that we've heard before. which is specifically from Anthony Noto. But like last year, we saw basically the same thing. USDG, which Robinhood is by the way involved in, USDC, PayUSD, FIUSD, which is Fiserv's. So in essence, what MasterCard is building is the platform to use stablecoins on. They don't really care. They're almost stablecoin agnostic. They might have like a more lucrative deal with USDC or something, but whatever it is, like they're happy to add SoFi USD, but it's one of many options. So I don't like see this necessarily as, oh, this means SoFi is going to go to the moon for revenue or anything. But one of the things that you have to do when you launch a stablecoin is expand its use cases, expand the platforms that it's available on, and of course the liquidity as well. So this helps to move that in the right direction. But yeah, it's not a like, oh man, this is the huge catalyst that we've been waiting for. The insider buy was actually more important, especially because it helps the case of SoFi getting in the S&P 500.
Yeah, I think agreed 1,000%. And don't forget, like SoFi has multiple partnerships with MasterCard that they've done in the past through different products like credit cards and whatnot. And also Galileo has similar partnerships. So this is not even their first time collaborating. And I think the point still stands that it's good for exposure of their product offerings, even though it's not exclusive and even though it's not like, for all their transactions or whatever. It's still a step in the right direction.
Yep. Yeah, for sure. And, I'd like to see them continue to get their crypto chops back from when they had to remove that from their ecosystem several years ago. So I think that they're an interesting play. I don't know if you saw this. There was something that President Trump commented on specific to stable coins about an hour ago. Did you happen to see that?
The Genius Act stuff?
Yeah, the clarity. Yeah. Let me throw that up real quick.
Yeah, he posted saying banks are being greedy.
Yeah.
Yeah.
The
Okay.
Genius Act.
Go ahead.
You want me to read it? Okay. The Genius Act is being threatened and undermined by banks, and that is unacceptable. We're not going to allow it. The U.S. needs to get market structure done ASAP. Americans should earn more money on their money. Banks are hitting record profits, and we're not going to allow them to undermine our powerful crypto agenda that will end up going to China and other countries if we don't get the Clarity Act taken care of. The Genius Act was the USA's first big step to make the United States crypto capital of the world, and getting the Clarity Act done is the next step to finish the job. So I think it's probably enough on that, but you guys get the idea. Like, with a hang up on the Clarity Act specifically has been banks saying, hey, if you let them offer yield, then that hurts deposits and it just undermines the entire financial structure of the United States, which is probably very inaccurate. But, banks, like any businesses, can get greedy. The nice thing about SoFi is this doesn't really hurt them. Like they can offer yield on a crypto currency, on stablecoin, using the little bit different than a normal cryptocurrency that is backed by 3-month treasuries. Instead, it's based on the Fed fund rate, or is it the overnight rate? I don't remember. Help me out if you know it in the comments. But and they're also a bank, so they're uniquely positioned. But for BM&R, like this is a big deal because a lot of the Ethereum thesis, which is a BM&R thesis as well, is stablecoin adoption. And if stablecoins cannot offer yield at all, especially if they close loopholes like how PayPal is able to give yield right now, all of a sudden you have a slowdown, at least in this stablecoin economy, which isn't really great for Ethereum. I don't think it destroys the thesis, but so this is, I thought, a nice piece of news.
Yeah, definitely. And I think he wants to definitely get this passed as soon as possible. The stablecoin reward is going to be the biggest hurdle. If that is fixed or when that is resolved, then this thing is going to be passing right after. I don't think there's going to be any more hangups. Obviously, there's easier said than done, but I do think that this will get done by April or shortly after, maybe May. I don't think anybody wants to delay it much longer than that. But I mean, like banks have a big influence, man. Like banks, obviously, through lobbying and other political pressure or whatnot, like this is something that they don't want to let slip by. So we'll see.
For sure.
Beard is saying Jamie posted today as well, so maybe I'll look at that, and then Roy can answer this question.
Yeah, so I was going to say, and thank you for the donation and also the $1 donation as well. Is there any trading platform roadmap for SoFi? We don't have that. Usually, SoFi doesn't reveal those sort of things. Now, there was a post, and I was trying to find it with Anthony Noto. It was actually a reply. Initially, it was retweeted quite a bit, but basically, he gave a bit of a roadmap of many of the things and projects that SoFi was working on and building towards. And I don't remember any specific things other than I think there was a reference to options possibly that were there. So yeah, we don't have a lot of information. I don't know that that's the main focus right now, though they will continue to implement some things here and
there. Yeah. So let's go over here to what Jamie Dimon's commentary, and he says, JP Morgan CEO Jamie Dimon says stablecoin yields should face bank-style rules, calls for a level playing field, said that yield-paying stablecoins should face the same regulatory standards as bank deposits to avoid creating a parallel banking system, arguing that firms offering interest-like rewards on balances should be regulated as banks, setting capital, liquidity, and FDIC insurance requirements. The remarks come as lawmakers debate stablecoin yield provisions under broader crypto market structure legislation. Roy, your thoughts on that?
Yeah, disagree. But I mean, he's trying to protect a major way that they make money is by offering actually really abysmal yield for the most part to customers while keeping most of it based on customer deposits and also trying to halt the adoption of cryptocurrency. I mean, like almost completely if it was going to be regulated like that. So I think Trump is right that if you do something like that, then the budding ecosystem, which China tried to kill multiple times, would probably emerge elsewhere instead of the United States. So that would not be wise. Plus, I mean, like the structure of stable coins, which is much of what Jamie Dimon there is talking about, it benefits the United States in two ways. Perpetuation of the U.S. Dollar as a global reserve currency. Most holders of U.S. dollar-backed stablecoins are international. And also, it gives a lot of buying pressure on 3-month treasury yields, which is really important as we are needing to sell a lot of those since we are addicted to debt. So, yeah, completely disagree with Jamie Dimon. Not too uncommon. He is kind of a perma bear and dour on a number of things like this. Always worth a listen, though, just to be outside of that echo chamber. What were your thoughts on his take?
Yeah, I mean, obviously he's going to say that, man. He's going to talk his book. He's going to try to sort of tilt that perception in his favor. I think that the best product should win in a perfect world in a market like that. And so if you're offering an inferior product, then you shouldn't keep offering it as a result of some regulatory framework or as a result of some, loophole. At the same time, I do believe that there should be a level playing field, not necessarily to bring crypto down to the bank standards, but to open up the playing field for the most superior product offering from a user perspective. And so I do think that I am in support of the stablecoin rewards. Obviously, the banks are not going to like it, but they're going to have to adapt because that's just what innovation is. It's going to cause incumbents to adapt.
Yeah, I mean, and it's harder for the old line, the mega banks, to be able to adapt. A lot of the business model is around this, that they can control the interest rate, and that there are a few other players that are attractive. Of course, that's increasingly not the case these days. And there's a lot of people that are comfortable putting their money in other alternatives, especially if they're FDIC insured anyway. But yeah, they got to adapt. And it sounds like this gets pushed through. That's, I think, very important for crypto. I don't know that halts the winter, but it certainly helps. let's see. Matthew Johnson said, "Do you think some banks? This is 633. Do you think some banks are playing hardball with the Clarity Act since Trump is trying to cut credit card interest rates? Also, that fact that Trump is suing Jamie Dimon. I wouldn't even make that complicated. They know that allowing this is going to not help, especially the old legacy banks that pay out absolutely nothing. Um, so I think they just realized, like, hey, we need to put a stop to this. Now, the cutting the interest rates thing, that really can't happen. It has to happen actually through Congress, and there is not bipartisan support for anything like that. So, as I said from the beginning, it's not going to happen. He's just talking. And yeah, the Jamie Dimon thing, I don't know about that. So maybe you know something about that, Tevis.
No, I don't know anything about that. Like, I don't think the two should be related, nor either party should hold one over the other's head. And ultimately, I don't know, man. Maybe I'm more black and white in terms of how I see these things, but it's interesting because historically, in this case, we've had regulators and government be the bottleneck for innovation. And now you have the regulators and the government be in favor of the innovation. And you have incumbents are so powerful that they can dictate if and when something is going to change. And that I think is a very troubling concept in many ways because it just shows the inherent power of the traditional finance system that if you want to move something away, it's going to be kicking and screaming. And there's like obviously, but the fact that there's been so much pushback on this that lawmakers can't get this done, even though there's overwhelming support for this to happen, just shows the grip that traditional finance and the legacy banks have over lawmakers and over policy in general, which is like, for me at least, it begs other deeper questions about the entrenchment of how decisions are made in a democratic process. But that's neither here nor there.
Yeah, I mean, there's a reason why banks are very large donors for both sides of the political aisle. So it has been that way for a long time. It's nothing new, actually. It's more than 100 years. One other question that I see, if you could throw this up on your side, from Tom Perlaska at 635. Or no, that wasn't it. Yeah, 635. And do you think this war will affect SoFi in any type of way? There actually is. It's not a first order effect, but in essence, this has caused the energy prices to spike, even though it's come down from that peak, just because of the oil stuff, the military escort things that Trump is talking about. But that can lead, if the energy prices continue to stay high, elevated, they even increase over time. That can increase inflation, which means rate cuts don't happen as rapidly, if at all, this year. And I don't think we'd get rate hikes, but I mean, if we get that too, the SoFi thesis is much more than rate cuts, but rate cuts help a lot. So yes, if this war lasts a lot longer and energy prices stay much, much higher for whatever reason, that's bearish SoFi. Not destructive of the case, but yeah.
I think it would have to last a lot longer for it to start
Yes.
affecting SoFi because it doesn't really affect their fundamental business. And the way that it affects SoFi, at least the way I see it, and I think the way Roy sees it as well, is through the macro. It's got to affect the macro in such a meaningful way that it permeates into affecting SoFi. But there's no direct implications. It's not like they have an office in Tehran or something. Or in the case of Amazon, data centers in Bahrain that got bombed. But yeah, they don't have any clients or exposure in that region, so it shouldn't affect them in any way. And I don't think it's going to last long, like I said.
Anything else on SoFi? Otherwise, you want to talk some air?
I think we can talk some air for sure. Clarity, SoFi CEO Noto has expressed strong support for digital asset market clarity. Yeah, Noto is a big fan of this, of crypto in general, quite frankly. And crypto is going to help SoFi, not only from the SoFi USD stablecoin perspective, but also in their brokerage business and international remittance and all of this other stuff. So he's always been a proponent of he was owning Bitcoin since like the relatively early days. So, and he's very vocal about that too.
Yes.
And yeah, he doesn't like big banks. All right, let's talk about Samir. Roy, tell us how you are a newly minted multimillionaire.
It's been good, man. It's been really good. Yeah, they've had a couple of different things that have happened. That I don't know if I mentioned this one previously. February 26th was that. Yeah, regardless. They received a couple of orders past that one that they had with the Sonoma systems back on February 11th, which is the one that they talked about in the earnings, filling the booking. And then we received a 14 million order, and then this one right here was about a 7 million. The interesting thing about these two, it's two different customers here, and these are follow-on orders. These are the most expensive units that they have, highest margins as well. And then they added, a couple of things. So you have wafer packs, which are kind of the consumable, as essentially you can think of it as that. And they also had the auto loader, auto aligner. Yeah, it's like I don't have that quite right, which is an add-on as well. I think it's about $1 million. Now that doesn't mean that it's a large, like for most companies, 14 million is nothing. You look at their revenue, what they put up this last quarter, it's a meaningful increase, which is one of the reasons why the stock continues to go up quite a bit. And one of the things that was beyond like the two additional cells, which looks like that they're not only going to hit the high end of the booking estimate that the CEO gave out, but actually exceed that. Even if there's no more orders, the rest of the through now to the end of May, which is exciting. But you also have a note from William Blair. Now, there's only 4 analysts that actually cover air test systems. And these guys have been covering it since I think 2023. They got in during the silicon carbide ramp up with the automated testing equipment. Little bubble, I guess you would call it at the time. But they said basically, like, because of these secured wins, this is before the one that came out today, that it basically proves out the bull case of moving the testing upstream. And they said that their proprietary model for burn-in tools for AI processors, and this is just part of what Air Test System does. It's by no means like the main thing. Even it is probably the most important part of the bull thesis. But in 2030 forecasts a 1.5 billion to 2.3 billion total addressable market range, and estimates a 30% market share reflects a fair value of $50 to $70 per share for Air Test Systems. So signals a couple of things, basically that this market is ramping immensely, and if Air gets a 30% market share, I mean, look at their market cap. They're $1 billion right now. There is higher upside, and I think that this is a long-term play. But for me, nobody goes broke taking profits, and I sold intentionally, knowing full well, like, hey, if things keep running from now through March 20th, $50 covered calls, did sell 155, and I think 160 as well, representing a little bit above 25% of my position. If all those go, it's fine. I've made a lot of money on this play. I'll continue to be able in the rest. But when my portfolio is like 30% just because it's run so hard in a micro cap, that's kind of scary. It's fun, but man, like today, we opened up down like 6, I think almost 10% actually at one point, recovered to 1%, fell to 6%. It's like, it is volatile.
It's wild. It's crazy price action on Air. And quite frankly, man, I mean, you are a brave man for having it as your number one position, being such a small company. But by that same token, I don't have enough of it because it's 0.5% of my portfolio, and I already sold my calls. That like doubled in the span of a couple of weeks. And I definitely have some FOMO because it went to 44, and then this morning goes down to 38, and then it just like went back to 44 intraday from 38. And I was like, holy crap, like this thing is a roller coaster.
Yeah, I think institutions are probably buying it. I mean, retail as well. Retail has been doing a lot of buying the dip. This, just because it is a microcap, can be very choppy. So, I always tell people, like, don't chase big green candles. Oftentimes you'll get burned. But it could pull back in this current environment that we're at, to like 32, 33, which is meaningfully down from where it's at right now. It wouldn't shock me if I see it fall much below that. Even I would be tempted to add at that point. And it's my number one. I mean, it wouldn't be my number one position there, but it'd still be very large. But
yeah.
Yeah, it's kind of fun. Like there's a number of people that actually were in the air trade that just weren't really talking about it before. I remember June last week mentioned that she was buying at 8, which is before I was. And I've encountered a few others too. And there's been a few that have followed on like independently or saw and looked for themselves, and they always deserve their credit themselves. But yeah, it's a small community of airheads, but it's been holding up my portfolio, man. Like I've had a lot of red in my portfolio, but Air and VG have like just held it up. So it's great.
Yeah. It's something. So yeah, go ahead.
I ended up, of course, bought NBIS following you in that trade. Why is the market still confused thinking that NBIS is the exact same thing as CoreWeave? Like 3 pieces of news over the last 2 weeks have come out very specific for NBIS, or not NBIS, for CoreWeave. Even I did it, I guess. Earnings concerns, financing concerns from Blue Owl, the lawsuit as well that hit them today. There's been a couple other little rumblings too. Every single time, both not CoreWeave. Oh man, NBIS and IREN get caught up in the CoreWeave stuff. So
yeah, it's frustrating for sure as an NBIS investor, but I mean, I don't know, man. Like I do think that over the medium and long term, it's going to be just opportunity. Because it just, to me, like the silver lining is it shows that the market still doesn't understand the differentiating factor of NBIS and the execution that goes into all of their press releases and their earnings and everything that happens behind the scenes. For them to expand to, basically double their data center capacity year on year. I think a lot of the market is calling BS on their ability to do so. And quite frankly, that to me is an opportunity because you have, and I see a lot of parallels, quite frankly, to SoFi. And when we were investing in SoFi in the single digits, right? Because you have a leadership team that's been shown to go above and beyond, consistently executing. And then you have a market that doesn't give them the benefit of the doubt and quite frankly, bets against them every chance that they get. And you put those 2 things together and you add time and you get massive arbitrage, right? It's like, execution times doubt times time equals money. So I think NBIS is just going to be fine. I think they have plenty of options to finance their capital expenditures for 2026. Independence was just received approval earlier today from the city council. And they also did get a big tax break in that data center as well. And we can throw that up. I actually have the press release right here. So yeah, Independence, NBIS secures approval for its first gigawatt scale AI factory. City Council in Missouri approved. They're allowed to proceed with construction. This is earlier today. The Chapter 100 was approved. Capacity up to 1.2 gigawatts. Independence is going to be our largest AI factory in the United States to date. We're fully committed to making it a project the city is proud of. This is our first project of this scale, but not the last. Of course, this is something that's wholly owned by NBIS. Team is operating in the Kansas City area, seeing the factory as essential to the long-term growth in the U.S. And then listen to this, 400 acres, 1,200 construction jobs, so on and so forth. Closed loop cooling system that keeps water consumption comparable to a restaurant or an office building. and noise reduction technology will be built in throughout. Under the approved agreement, the associated tax incentive package, NBIS will make payments in lieu of taxes, projected to deliver over $650 million to the city, local school districts, and other taxing jurisdictions over the 20-year term. So this is just something that we've been tracking now for several months, and it's happening. And there's so many of these, right? Like France is the other one. That's a big data center that we didn't expect. Multiple expansions in New Jersey and UK, and I think NBIS, my main concern with it was not necessarily the build out of the data center, but the fact that they had like a presence in Israel. And so there was a proximity, especially because of what's happening with Amazon. Maybe we can talk about that. But as relates to CoreWeave, I mean, quite frankly, it's just big money that's trading everything in a bucket, and they sell the bucket collectively, and NBIS just gets hit in the collateral damage. But if you truly believe what you own, then you can take advantage of that, and you can be way better in the long run because it'll stay at a discount for longer relative to their ability to execute.
Yeah, absolutely. And the bucket thing is frustrating because I'm out of money. Otherwise, I'd be like, "Oh, this is great." It's the dip is just really frustrating when you have like I haven't bought anything this week. I bought like $300 at Ethereum over the weekend and my DCA in the Bitcoin, and that's it. So
Yeah.
I'm tapped out. I gotta if it's a meaningful move, I gotta sell something else. But beyond this, there are protests, against data centers. We might see those ramp up. But there are counter protests, as Nate indicated, that this person is obviously very bullish because no data center. So having no data center is not acceptable. They say no to that. They really want them. So that's always really good to see. I think that there's a lot of demand for it. And apparently some just from the opposite of not in my backyard.
Yeah, I mean, you don't need an IQ test for so many things in the world. And unfortunately, I think you should need an IQ test for some things. But this is who you're trading against.
I thought that was hilarious. Yeah. Beyond NBIS, so the one other name that had earnings, well, last week, of course, NVIDIA, we already talked NVIDIA, Nubank, we talked a little bit about Nubank. FIGR had earnings on a Monday, or not, was it Monday? It was Friday. And they were really interesting. I think that I actually have a position at FIGR now. They absolutely dumped, then they went back up, then they dumped again as well. But yeah, I actually posted a piece today that was like figuring out FIGR. And it's like the thing for me, Tevis, is, well, let me just pull up the article. Like one of the slides that I thought was really interesting. This is something like Artemis. They gave me permission to use a couple of their things that they already made in a previous article. But okay, here it is. Let me throw this up here. So they have, and this is on my X profile if you guys want to read it, if you're interested in it. I'll eventually be doing a video. But this right here, like so there's, we've already talked about like the Clarity Act, Jamie Dimon, banks, SoFi, that sort of thing. And SoFi's, I think, positioned to do very well in this space because they are more adaptive than most of the online legacy banks. But Jamie Dimon and the other big bankers are concerned because, in part, because of things like this. This has nothing to do with the Clarity Act, and they're not actually impacted at all through that, just because their yield stablecoin is very differentiated. But they have a bunch of different platforms that they have launched, and all of them are growing rapidly. Like their revenue year over year, Tevis. Mm-hmm. Do you know the year over year revenue growth? Or like guess?
50%.
100%.
That's wild.
Yeah.
They're small, right? They're like 3 billion, 4 billion?
7 billion market cap. So yeah, they're not large.
Market cap?
What's that?
They're a 6 billion market cap.
Well, yeah, it fell recently. So 6, 7, 8. What's 6, 7?
Yeah, what's a couple of billion amongst friends?
Yeah. Anyway, like where they got started initially was with their home loans, their HELOC specifically. They went to a bunch of banks who are like, "Hey, let's do this. Look how efficient this is going to be." And they're like, "Great, we'll be the 10th to do it." And so they're like, "Okay, we have to do this in-house first." They've built a platform since then. And so they still do, it's actually less than half of their lending at this point. They do in-house. But it's kind of like the loan platform business. But just because of their vertical integration with their crypto, they have ridiculous amounts of cost savings. You can look at the basis points that they save on the average HELOC and the time savings as well, to the point where if you are applying for a HELOC, you have an answer within 5 minutes and you have funds within 5 days. Now, it can be a little bit longer as well, but it can be as early as 5 days versus, I think the average is 45 days in the industry. And this, I mean, they're not the only company that does this, but the unique thing is, so this is the CEO or the founder of SoFi, Mike Cagney, that's one of the C-suite members of FIGR. But there's very few companies out there that I think understand the needs, the demands, the regulatory features as well of traditional finance, and also understands crypto natively. But FIGR is one of those. So I like, they really very much interest me. I talk about a lot of the different platforms that they have, the opportunities that they have through that. I mean, like, winter is usually one of their worst performing months, just because most of what they do right now is HELOCs. There is revenue coming in that's rapidly growing in other means, but that just like the mortgage market tend to be lighter in the wintertime. So these are it's just ridiculous. Yeah, not everything was perfect in the earnings. They did end up saying that their take rate would be 3.5 to 4%. A lot of that has to do with the volume increase actually being dramatically more, and possibly through partners like Agora, which was the automotive announcement that they had with the earnings as well. But so that was like the one part of the earnings that people didn't like. I also saw like, oh, really high stock-based compensation, but we see that with names like Palantir, with SoFi, with most US tech companies, frankly. But at least the way I play that, Tevis, is if a company is growing 100% year over year, I'm okay with pretty high stock-based compensation. That's just me. Growing 10%, okay, that's not okay. You got to knock that stuff off. So, but yeah, we'll have to do a deep dive at some point, a stock take episode on FIGR. Hopefully,
you gotta interview Mike Cagney, man. I think the community needs it at this point.
I think that's very likely to happen. I don't know exactly when or how, but there have been some discussions on that. So that'll be fun. And I think I looped you guys into this too. Noted Bear Ram, who is just anti-SoFi, has been the longest time. Hates, well, seems like he hates anyway. Chris, data-driven investing in particular. Also Tanner, you. I don't know if he knows even about me, but maybe not you as much. But yeah, he seems to hate everything that SoFi has touched, and man, he hates FIGR.
Well, yeah, Mike Cagney was going off on that dude.
He was. I was like, buddy, put down the phone, go to sleep, sleep it off. But yeah, I won't repost it. But if you guys want to see something wild, yeah, that exchange between Mike and Ram was not what you typically would see for most CEOs.
Honestly, I kind of liked it. It kind of made me more bullish. If I see a CEO, telling somebody on Twitter to F off because they're an idiot and this and that, and like not mincing any words, I'm like, I want to buy that stock, man, because that CEO is going. This is the oh man, Roy, remind me, what was it? We will drink their blood, or what was it?
Oh yeah, the CEO of Redfin. Yeah. Yep.
Stock went up after that, though. Stock pumped.
Drink urine and drink blood drink our own blood is like the weirdest comment. You do like CEOs that are fighters, and FIGR, like the hard thing with FIGR is kind of like with NBIS, the basket trading stuff. So crypto is not doing well right now, and so the market's like, well, this is a crypto play, and it is. But it's not a crypto play that really has anything to do at all with the price of Bitcoin and Ethereum. Now, a little caveat, you can back in some of the loans with crypto specifically. So it's not exactly fair to say that it has nothing to do, just because there's some slowdown on what loans would be otherwise with crypto back. But it's like 6% of their entire lending volume for HELOCs in the past, and less going forward, just because they have so many things that are ramping all at once. But the market's like, oh, it's in the crypto bucket. Let's sell it off hard. Now, there's been some issues with FIGR. They had some like first evers. And when you are the first mover, it doesn't mean that everything goes right. They had a blockchain offering, which frankly was mishandled. It was. A lot of issues with it, but they had to be first because what they're trying to build is essentially an on-chain private equity network, and that you can basically host your stocks natively. This isn't even tokenized, and there's some benefits there. Like the biggest one is what customers get paid if they allow their stocks to be lent out to. It's a significantly higher rate. Plus, settlement is instant. And it's 24/5 markets, expanding to 24/7 when there's liquidity. But there's a whole lot of issues, man. But yeah, regardless, like it's caught in that bucket. It's caught in also the finance bucket, which finance we know because we own SoFi. Other than the last couple of days, it's been brutal out there. So when you're in both buckets at once, the market shoots first, asks questions later. And so I'm like, okay, I don't know how long it's going to take for them to figure out FIGR, that it doesn't really belong here. And it's growing ridiculously and it's not slowing down. They're differentiated. They have a really interesting moat too. It could take 6 months. It could take a year. Long term, I think that it's going to be just fine. And I don't have a very large position on this or NBIS. And also I want to increase NVIDIA too. So if it stays in this area, I get to add more. That's a good thing.
Yeah. I don't own any FIGR, $28 a share. It's crazy. It's actually below what the IPO was, or the
28 is what they IPO'd at.
Was it?
If you were allotted shares, yep. Yeah, it spiked immediately to 35, and then it ran to past 70. I had called FIGR as one of the outperformers, during the gift exchange. AEHR is the one I picked, but FIGR was number 2, and I'm like, hey, I think it's going to be close. And it ran so hard at the beginning of the year. I'm like, well, I think I missed it. And then it fell back here. So I'm like, okay, let me not just sell cash secured puts and be greedy. Let me actually own some of this too. So
yeah, it fell as far down as 25, and we'll see what happens. It could definitely keep falling. I mean, we've seen that with honestly, man, I just want to like have a fun portfolio, like I don't have the money right now, but it's like if I had, I don't know, 10K or something, I could be like, all right, I want to buy Figma, I want to buy FIGR, I want to buy some Wix, I want to buy more Air, and it's all the things that we've been talking about, but I'm just like, all right, what am I gonna sell? Am I gonna sell NBIS? Am I gonna sell Amazon to buy these things? Like I just don't, all the new money I have keeps going into like the same things because I'm just bullish on them.
But by the way, do you own Wix at all?
No, I saw they partnered with OpenAI.
Yeah, so that was interesting. And then this, I saw other people posting it.
Earnings tomorrow morning, by the way, Roy.
Oh, they do. Interesting. Yeah, I don't own any. I don't have the money to own anything else. But this right here, Cursor went from 1 billion to 2 billion in 3 months. Which is like just insane. They announced that today. Well, that wasn't. It's later in the announcement. Regardless, it's base 44, which Wix acquired. It's just showing like what the ramp is that's happening in that space. Yeah. Base 44. I don't know that it'll double in 3 months. It probably will because it's actually a much smaller base, much more than that. But like that's the thesis right there with Wix, and it's like it keeps falling. What is it at now?
74.
Yeah, I vaguely remember it being in the 60s.
It was, yeah. It fell as low as $60.
62.80, man. Buying more than 50% of their float back in. Like, that's just crazy. I know that, like, their main product, what they're known for, Wix, is just meh in the current environment, but it's still generating cash, and base 44.
Growing double digits, like 13% is 13%. I mean, I wouldn't say like that's mad. The stock has fallen like what 80% from 70% from their highs.
Yeah,
So
yeah, it's too many opportunities, only so much money.
That's exactly it. Too many opportunities, only so much money. We'll see what happens with Wix. I am totally going to get FOMO because they're going to pump immediately, and when I wake up tomorrow morning, it's going to be like, oh, Wix is at $89, and I'm like, oh crap, it was at 74 when Roy and I were talking about last night. You guys just watch. I hope it dumps, and then they have some, because they're going to be providing new base 44 numbers, and they're going to be talking about the guidance, and I just think that, oh man, I kind of want to buy some now in after hours. I shouldn't do that.
Yeah.
Um,
Yeah, I can't. I'd have to go in margin, or I'd have to sell something else, and I can't. So, but that's one of the reasons why too. Like going back to air, I don't mind if it pumps past that $50 strike. There's just it would be one thing if this was like the market, 4 or 5 months ago, where there were very few opportunities that were, and there was like no screaming deals other than like one or two here or there. Um, but right now, like you can put on a blindfold, throw a dart at 500 different companies there, and you're going to find some really good buys easily. Just so
so
yeah,
Roy, let me ask you this. Anthropic, by the way, is they're doing 20 billion in revenue. So this was just recently announced. Of course, Anthropic is almost 400 billion in market cap, and they've had quite a crazy couple of weeks from a news perspective. I feel like we talk about Anthropic every single bootleg and
yeah,
the Ron and Travis show because every couple of days they just have news.
that's right.
The latest, of course, is that they turned down the U.S. military, and and then Sam Altman uh, said we support them. And later that night, he then put out a note saying that OpenAI was going to be working with the DoD. And what happened was this, Roy. By the way, Anthropic, oh man, I wish I saved these posts, but Anthropic was seeing their highest surge of downloads in like the last however many months, like in the last year and a half, basically, ever since that news broke. So overwhelming support for them to say no to that deal. And by contrast, GPT continues to lose market share. OpenAI sells out to the literal Department of War, 295% increase in uninstalls, 1-star reviews up 775%, 5-star reviews down 50%. Claude downloads, by contrast, up 81%, passes ChatGPT in downloads and hits the #1 on the App Store. Quite crazy in LLM land. Roy, what do you think of this? This is pretty stark here for the US downloads of both Claude and of GPT mobile apps from Feb 1st to February 28th. As you can see, ChatGPT was consistently in the lead until that decision on the 27th, 28th of February.
Yeah, honestly, I think ChatGPT is still better for like the regular everyday user who's like, tell me about like so and so's next album and when it comes out and all the details. Versus like the builders are obviously using Claude, and it's not even close. Which all along, like that's been their plan, is to really fill out that niche very well and maybe expand into other verticals. It was, for a long time, I think both you and I were saying if we could invest in Claude or Anthropic rather, we would have. Versus, I think you were hesitant on investing with OpenAI. I was very hesitant as well for a number of reasons.
Yeah.
This seems a lot easier to monetize versus people paying even $20 a month to answer a question a little bit better on Taylor Swift's next album.
Yeah, I was very hesitant on OpenAI, and by the way, Claude doubled down, or Anthropic should say, doubled down on this surge because just recently, this is as of March 2nd, yesterday, they released this. Memory is now available on the free plan.
That's big.
We've also made it easier to import saved memories into Claude. So with one prompt, you can basically get your entire ChatGPT history, export, and then import it. And it's like there's no opportunity cost, there's no switching cost of you moving over to Claude. So like, I think OpenAI, like people are like, oh, well, ChatGPT and Gemini. No. The real competition here is Anthropic and OpenAI. Like these guys are heated in that competition. The Peter Steinberger thing that happened with OpenAI hiring him. And if you see a lot of the posts that they have, it's like really charged. I don't know if you saw they wouldn't shake hands or whatever.
Yeah. I mean, they kind of had each other's back on the government's thing, but Sam, I think he likes to play both sides. So, yeah.
I
don't like Sam.
I don't trust that guy at all, dude.
No, I do not. Yeah. Dario, yes. But
Yeah.
Matthew Johnson asked,
I don't trust Dario either, quite frankly.
I mean, like relative to Sam Altman is what I'm saying. So,
Sure, I guess.
but that's like I put Sam Altman in the Zuckerberg camp, and maybe that's unfair to one or the other. I'm not going to say who, but yeah, I don't trust either of them. Versus Dario is like, I don't know. Yeah, Matthew Johnson asked at 7-Eleven, do you think Anthropic made a long-term business decision by saying no to the government? And it wasn't really related to their ethos by saying no. Did they blink? There's more upside outside of the government. I don't think so. I mean, like basically they're turning down revenue from doing this. And I think it's unfair what the government did. And I don't know that it will stick, but I don't, I'm not a lawyer or anything. I don't know exactly on this, but labeling them as such, basically that they're security risks as such, that all these other companies that are using Anthropic have to go away. I don't see that being justified. So if it is, I mean, that's massive downside for Anthropic, but I just don't think that's a reality at all. I mean, like after all, Claude was even used with Iran. So hopefully this will get worked out. And I do see the government's point, like you don't, now they denied it, but the government had said, or somebody from the Pentagon had said that Dario, when asked about like, okay, we have nuclear missiles inbound, surely, it's okay to use Claude in that case. And like, well, call us on the phone and we can work it out. It's like, dude, I don't know that was really asked. The Anthropic people denied it, but yeah, it was wild. And good to see Evan. Yeah, looking forward to seeing you tomorrow. Yep, I'll be there.
What was I gonna say? Oh yeah. So with regards to this question, I do think that time will show that it's relatively a moot point, because whether it's with Anthropic or somebody else, like the government will have their way. And Sam proved that point with flying colors. You gave him a chance to disappoint us all, and he took it without hesitation. And that's just free market capitalism, man. Like it's, if you offer a deal, somebody's going to come up and take it. So I think it's great that Anthropic made that stance. I think it is related to their ethos to some degree. And sure, maybe in a more nefarious take, you could say, well, they knew that this was going to set them up for success over the long run, and they can always patch up those relations in the future. And they think they have a superior product offering and blah, blah, blah. But at the end of the day, the military solved their problem. They're like, all right, cool. We're just going to go with OpenAI, and we're not going to go with Anthropic.
Absolutely.
Yeah,
there's other choices out there, and there's a pretty large financial incentive for capitulation. So that I don't know that it'll happen with Anthropic, but many others I think would be more than willing to participate. So yeah, Q&A time.
We can definitely do Q&A time. I just learned that Evan owns Tom Lee Tracker page. What?
Oh, you didn't know that?
I love Tom Lee Tracker page. How does Evan do this in addition to his page?
What? Evan is more than just human. He long ago had Palantir install the ontology directly into his veins. So he is actually artificial intelligence, like real stuff. Like the LLMs are just a smokescreen. So,
bro, I need to collaborate with Evan. All you guys get access to Evan from the Hood events.
You got to come to the Robinhood event.
I'm locked out, dude. Tell that to Robinhood. Tell that to freaking Robinhood. Respond to me, guys. We're not talking. We're boycotting Robinhood.
This be my +1. We don't even have to hold hands.
Robinhood on this podcast until they give us equal treatment. All right, equal pay for equal work of both members of this podcast.
Yeah, next one. You come with me the next time. So
that's what they said. I don't want to come as a +1, bro. I want to get flown out by Robinhood. Vlad, where are you at? Do I need to buy more shares? Is that it? Just because Roy's
probably yes.
Air millionaire now? All right, let's jump into Q&A, guys. Let's see. What do they consider regime change? Okay, so I want to talk about this actually, and we also didn't talk about the AWS stuff.
Yeah, I'm
That's
going to be
also
listening because of my throat. I need to grab something to drink, so I will be right back. You start.
okay. So this is in reference to the poly market around this question. Let me share that with you guys. So basically, we were talking about the Iran regime change, and now there's a 40% chance that it's going to fall by June 30th. And generally speaking, they have here the descriptions of what they consider regime change. However, and I'll say this when Roy gets back, uh, these guys, it's really interesting actually as to how they settle some of these bets, because I don't know if you heard this, Roy, but apparently Polymarket was refusing to pay out
Yeah,
on Khamenei's death because
Kelsey too.
and it's crazy because the poll I think was, and you're gonna have to give me some rope because I don't remember it perfectly, but it was basically like, will he be in power by June 30th? I think was the poll, or will he not be in power? And like the dude literally died, and they're like, well, technically, he didn't get voted out or anything like this, and so they just refused to pay about that. I don't know. Is this what you're sharing?
Yeah, two big posts, I think, from Tarek Mansour, the CEO and founder of Kalshi, all
Crazy.
basically saying, we didn't violate the rules. We didn't change the rules. We settled according to the rules. No trader lost money. We didn't profit on the market. Now, the problem is Polymarket, and I don't know if Kalshi does this. Kalshi actually doesn't. Polymarket actually is a market maker, Tevis. They made that shift back in December, which means they do profit off of the action versus Kalshi is just a platform. I think that that's healthier for consumers, frankly. And then beyond that post, yeah, on Khamenei, we don't list markets directly tied to death. Dude, you literally had regime change. Like, what do you think is going to happen? When there are markets with potential outcomes involving death, we design rules to prevent people from profiting from death. That is what we did here. And that's great. And I admire that stance. And that's absolutely how they should be.
What?
But make it clear on the front end. Like, other than death, will it be regime change or death doesn't count or something like that? Whatever, fine. Look, I don't want to get to the point where we're like gambling on people dying.
We can't gamble on people dying. I thought this
No,
was America. What the fuck is going on? This is
no, that's not
free
healthy at all.
market capitalism, baby. Let me put money on this shit.
I mean, like he went through and like some people are like, hey, this is great, good moral stance. And a whole bunch of people push back and were like, what are you talking about? Like, you think a dictator was just going to willingly step down? Like, your rules are ambiguous. They were not clear up front. This will probably lead to lawsuits.
I hope it does. I hope it does. Yeah, I love this
Yeah.
question. People aren't profiting from death in U.S. markets. I've never heard of that. People profiting from death and from war? What a strange foreign concept.
Now, on Robinhood themselves, Kalshi backends, so they don't really have much risk yet. They are building their own prediction market platform, but I've seen them not offer some Kalshi markets that are a little bit more controversial like this. And I think it's specifically for risk like this. Like, they don't want to have another GameStop moment in the predictions market space. They'll let Kalshi do that and Polymarket do that. But yeah, I think that's a wise.
Okay, all jokes aside, I think this makes a lot of sense. You can't gamble on that. It incentivizes people to kill somebody for odds. Fair. I retract my statements. We definitely wouldn't want to, incentivize any harm to come to dictators for profits from Polymarket. Still, people were pissed at Polymarket. Man, people were fuming at that, and like I would understand too, man. Like if I bet money that you're gonna get a regime change of a authoritarian regime, and you're like, nah, sorry. It's like, dude, what?
Yeah. No, like people are like likewise with Kalshi, I saw more of that. They are ticked. They are horrified, like how they could do this. Yeah. Yeah, you are fully degenerate. So I was pretty sure, I was hopeful anyway, that you're being sarcastic, and
Yeah,
you
of
were.
course. What other outcome could lead to regime change after 30 plus years?
I mean, it could be an abduction like Maduro, but even then, like they shifted the goalpost. Polymark did anyway. I don't think Kalshi did.
Yeah, excuse me. That's a horrible example because they also
Yeah.
refuse to pay out on Maduro too.
Yeah.
So, yeah, it's dude. There's going to be so much regulatory. There has to be
There
so
needs
much
to be.
groundwork that
There
has to be
need-
laid into these prediction markets. It's
Yeah.
insane. And like once you go into tokenization, you do this all through the blockchain. It's going to add another layer of complexity.
Yeah.
So that's the first question. They define it, but not very well. Yeah, B-Dub says it's a new market testing the boundaries of what is acceptable. Yeah, Tevis probably melted his puzzle down for silver contents. Hey, man, there's a reason NVIDIA is not at 200 yet. It's because your boy's procrastinating on solving that freaking puzzle. So I'll let you guys know. Okay, next question. Tevis, will you be going to a MIT meetup in Austin, Texas? I don't know when this is, but why is it in Austin? It should be in Houston.
Should be in Houston. Yeah, I don't know anything about it. I need to ask him tomorrow, I guess. Yeah, I heard they were thinking Houston and then Dallas, and I don't know if Austin is real or not. So maybe it is. But it's not that far away. Like Texas Triangle, that's like 3 hours.
3 hours? Bro, have you been to Europe? 3 hours, you're in like 4 countries.
Yeah, I know. For Texas, 3 hours is going barely anywhere in Texas.
It's wild.
Yeah, like we drove from here all the way to Phoenix, Arizona, but like half the trip we were just in Texas.
Yeah.
We got out to El Paso. I'm like, dude, we've been on the road it was like 8 or 9 hours of just nothing but driving.
Dude, I did Texas back in 2021, and I drove down to watch the SpaceX launch from it's not Cape Canaveral, it's what's it called? Anyways, at the very, very bottom to watch the SpaceX launch. And I flew in to Dallas, Fort Worth, and we did the entire drive down. Bro, Buc-ee's, love.
Yeah.
Love. Okay. The fact that I can go into a gas station and it's like a freaking warehouse and I can buy everything I could ever want, from a t-shirt to a mug to a hot dog to getting my gas. It's just amazing. Buc-ee's is the best.
Yeah.
And yeah, it's a lot of driving, but
breakfast burritos, just on point, multiple different kinds, a couple different kinds of salsa too, brisket sandwiches, which are really good. They make their own jerky too. And the bathrooms, I'm sure you use the bathrooms. They're famous for the bathrooms. They like literally have attendants in there that like their whole shift, I mean, this has to be terrible, but they do pay well, is just to clean the bathroom the entire time. So I've been in Buc-ee's one time when the bathroom was just not that clean. And it would still be cleaner than 90% of the experiences. And the door goes all the way down. It's like, it's so nice.
Yeah. If I had American papers, I would definitely be living in Texas. That's for sure.
Oh man, they I don't eat this too often, but they have a bunch of their own candy too. And they have like these peach O-rings that they dip in chamoy. Oh, it's like the most ridiculous thing. It's the
None
best
of those
candy.
words made sense to me. I don't know any. All I can tell you is I'd be fat as fuck if I lived in Texas, man, with all the barbecue, and it's just
Tex-Mex and Mexican and Salvadoran and Ecuador. Yeah, just like, oh man.
give me everything. I
Yeah.
will.
Oh, the Thai food. My goodness, it's good. Oh, and there's this like Korean barbecue place that Matt and I go to periodically. They keep giving me like buy one get one free. So I'm like, stop it.
I gotta visit Houston. I gotta visit you guys, Michelle and Ray.
Oh, dude, it's awesome. yeah, so
So I don't know when the Austin meetup is, Charlie, but depending on when it is, then I could see myself going there if I'm not in Europe. But I think I'll be in Europe for most of the summer.
yeah.
Steve, hi Roy. Question for the end of bootleg. What's one catalyst that you think SoFi that will begin the SoFi recovery later this year? That's the conclusion.
I mean, we might already be at that recovery point. It's probably more of a stabilization point with the insider buy, and the next one that I think is like 90% likely to come. Between that conclusion and just continued execution of what they're doing with the loan platform business and lending, like they don't need anything else for material recovery. Like they're undervalued right now. Don't let the bears mislead you. People look at the stock price action like, oh, this company is going to zero, terrible quarter. Look at the numbers, man. So yeah, no further catalyst needed. Just execute on the year and boom.
S&P 500 inclusion. Thank you. Next question. That is for vibe coding. How are you deploying and hosting your app? Do you have a database? What are you using for your database and backend? I'm using Supabase for the database, and I'm using right now Railway for the hosting and the deployment. You can use Vercel too. I've used Vercel in the past. That's pretty good. But Supabase, I think, is like the standard for small applications. It's very lightweight. Their free tier is very generous, and I'm paying right now for Supabase because I downloaded like all the insider trades over the last couple of years and all the 13F filings over the last couple of years and all the Congress trades over the last like 4 years. So I have like so much information that I'm just like sitting on now. And obviously that takes up space. I think I could also be doing things differently to use less space. But yeah, that's basically what I'm using. I use Supabase and Railway for the deployments and hosting.
So we don't miss this. Can you throw up Johnny NYMU's comment at 7:27? When is the S&P 500 inclusion date? It's actually this Friday after hours. So usually it comes, I think, at 5:30 Eastern time, but it's almost always late and almost always the website goes down. So, and if they don't include anybody, they just don't tell anybody for a while and leave people.
Yeah. Yeah. Johnny is skipping the line because Roy picked him out, but normally we're still at 626 in terms of questions. So we'll make an exception. Okay. Matthew says, why would other finance companies or banks use SoFi stablecoin? What are the benefits? Why wouldn't they just create their own? I think it's mostly because of like the hassle of creating and maintaining your own. Like I created this site, vibe coded, let's say, all the information you can find in other sites. You could very easily say like, oh, why can't I just create my own? Why would I pay, $3.99 or whatever? It's like, well, do you want to maintain that? If something breaks, if something goes wrong, if you have outages, if you have downtime, it's like you would rather pay a very, very, very small portion to SoFi and not have to worry about anything. And it's out of the box versus trying to like rebuild it yourself. So you can say the same thing for any software businesses or subscription businesses that, you personally are subscribing to. You could build it yourself, probably. I saw somebody with Perplexity Computer vibe code Notion, but it's like, what happens the first time that breaks? You want to have the hassle and the headache.
Yeah, it's kind of like the organization that I'm in charge of. We're doing a major website overhaul, probably very early next year. We'll get organized on it, but we know that vibe coding could build a better website, frankly, than what we have. But the problem is our organization exists for things other than building websites, so we would rather outsource that to somebody else, like even maybe a Wix or to somebody that creates a website and maintains it, and just pay them a small amount and then focus on what we exist for. So thank you, Matt. Good evening.
We will pause the question and answer to read some donations. Thank you, Matthew, for 12 months in Roy's channel. And thank you, Deep Sheiks AI, who says, Houston is the brother that went to jail. And Roy, you can confirm this for me. Dallas is the brother that parties a lot. Austin is the rainbow brother. And El Paso is the half brother. Roy, comments?
So like the one thing with Houston, I'll say is there's zero zoning laws. So you can have like a church right next to a strip club right next to a school. You can see those things. It's wild. Just like there's cities that are more zoned and less zoned. And I think you can way overdo it, but like there's almost nothing here. They have changed a couple of statewide laws, like with the schools specifically. But
Roy, you already made the sale. Stop selling. Right. Thank you for the donations, guys. Really appreciate those. Next question. Tevis, considering making Panda subscription-based, users can create a watch list and get notified when there's news on these TIGRs like SoFi and stuff. Yeah, okay. So I think eventually I want to cross that bridge for subscription-based. I think the reason I haven't done it yet is because I want there to be sufficient value on the free tier before I go into subscriptions. And I want it to work well with no downtime. I think yesterday was the first day where we had zero downtime. So it was up 24 hours because over the weekend it crashed like 3 or 4 times and I had to fix a couple things. And so there's still things like that to clear up. I also wanted to add like short selling. I wanted to add a whole bunch on earnings, other indicators, different alternative things to track. And so there's a whole bunch of features I want to make, but if I do go the subscription route, it would require, from a technical perspective, quite a bit of work to actually like authenticate and store user data and then determine like how to gate features through feature flags for subscription tiers. And it's like, it's kind of a hassle and it's a lot to bite off. It's just cleaner to have it for free because everybody can access it. But I think eventually, if I keep building this, then subscription is definitely one way to go. I don't know if you guys would be willing to even pay for a subscription for something like that. I don't even know if half the people here know what Paper Panda even is. Roy, did you see, actually, we made a bunch of changes. Me and Claude made a bunch of changes, including a couple
yesterday, but I may not have noticed the changes.
Yeah. So added a whole bunch of logos now.
Oh, that's nice.
Yeah. So now things look better. They behave better. I added a new feature tracker. So like you now get notified every time new features launch.
Dude, you've been killing it.
There's a whole bunch of like stuff in Congress now. So trade frequency, net worth. You can click on these people. Like there's photos and stuff, and it's still has a way to go, but it's starting to slowly look like a real website. But yeah, there's definitely still things
to do. I really like. I didn't just use your tool for the insider trade stuff with SoFi, just because it's your tool and you're my friend. I used it because it's like, dude, this is like the best free tool out there. So like really, really good. And like just the changes you made, it's very intuitive. So
yeah. And hopefully it gets better, right? Like I think there's a lot more that I want to add. Actually, I'll show you guys what the next version looks like. I'm going to be deploying this probably later tonight, or maybe I'll just let you guys wait for a couple of hours until I get off this pod. But basically we replaced this entire thing and we added more like stock prices and price changes. And the idea is like all of this is like third-party components. And then I slowly replaced all of it. So like all the stuff on the homepage used to be TradingView, and now we just built our own.
Yeah.
And then these like also like show up as pop-ups instead of leading you to another page. Yeah. Anyway, so that's the site. You guys can go on it. So here's how you leave some updates. So basically go to here, the support page, and you skip all this stuff and you just go share feedback, and it's going to give you like a little feedback form, and you just say, hey, I want this other thing in the thing. Explain it. It started off as a 13F super investor, tracker. So I could see like, oh, what's Buffett buying? What's so-and-so Ken Griffin buying? And then it expanded to insiders. So it started off like this. I can see, super investors are trimming Microsoft or whatever. And then I also added capital, like how much cash do they have on hand? It moved on to insiders, like, okay, like what are insiders now buying? And can I track all those? And then it moved on to Congress. So what's Congress holding? What are they buying? What's the momentum in terms of like what sitting politicians are buying? What's that activity look like? So Google has some bipartisan, bullish momentum, so on and so forth. And then I also added like retail pieces here. So I wanted to focus in the retail portion around, hold on. I think retail is taking a while to load. But I wanted to focus on the retail portion on what does the sentiment look like from a Reddit perspective. And so the idea is to just merge a whole bunch of these data points together. I'm sure I'll add more stuff eventually, but yeah, so this is all the Reddit activity in terms of mentions and whatnot. So the idea is like, okay, I want to see something that, and then here's also the YouTube videos. That's Matt Money right there. I had Nate in there. That's Roy's video. So the idea is to aggregate a whole bunch of different sources into one place. And why don't we go with everything free? It is everything free, but the site costs money to actually have all the data be hosted somewhere and to have all the data, like pull live data, like all that stuff costs money. So like right now it's losing money. And so the idea with everything being free is like, well, I can only fund this for so long if it's not sustainable by itself. Search bar to search for stocks, it's right here. I could add one in the top nav, but here you can search for like, I can see trusts, I can see stocks, I can see different investors, I can also see politicians. So it's just one search bar for everything. Sorry, I'm totally taking up this segment. APIs, a whole bunch of different APIs. There's a lot of stuff, but a lot of it is like public filings, 13Fs, Form 4s, all the SEC docs. The Stock Act has disclosures for the House and the Senate, so I'm pulling a lot of stuff from that. Reddit, pulling from Ape Wisdom. YouTube, I have the API. They're hooked up. I have an API for like Glassdoor and LinkedIn, but that one ran out like in the first hour. And so I think have no more calls for the entire month. Okay, that's enough about Paper Panda. Thank you guys for the questions and the support. I don't want it to like take up this whole show. How does the U.S. national debt story end, Roy?
Probably poorly. I'm guessing that it's going to just be through something like what happened during COVID, where there's a lot of printing that happens, deflation of the United States dollar, or rather inflation that happens rapidly, the United States dollar being worth materially less, and that's going to just crush folks. But I think that we can keep kicking the can down the road for a while. Eventually, you can't. So I really hope, especially if AI and robotics ramp the economy like I'm thinking, like that's maybe the last legitimate chance that we have to be able to exit what's happening before disaster eventually down the road. It's kind of like you'll see if you're ever driving a very steep mountain pass, on the other side, you see all these truck brakes where if you lose your brakes, you have your last opportunity to pull off. And if you don't, you're just going to crash. So yeah, it's not going to be a good thing if they're not able to do that. And I'm skeptical. So, but that, yeah, while down the road.
Yeah, I think crypto might also be a way to help with this. because if the US can front run the accumulation into crypto and do it in large scale, then they can use it not only as a hedge, but also as something where they can profit off of being early to the game. So we'll see. Okay, let's see. Thank you, Jim, for the donations. Appreciate that. Rick says, please give me range SoFi stock price summer 2027. All right. What's your range, Roy?
I don't have one. I haven't gone that far out yet. So what about for you?
Summer of 2027?
Yeah.
Oh, 2027. Oh,
yeah. Not this summer. It's just hard because we don't know what the environment's going to be like. We barely know that from one week to another.
I'll go 38 to 48.
Sure.
Yeah, that's what I would say. It could be higher, but we don't necessarily know. And quite frankly, if you look at like what they're going to be pulling in from an EPS perspective, I think Noto was saying on the February 6th interview that 49 is his like fair value on a PEG ratio perspective. So he obviously sees this as being deeply undervalued. And if we look, 16 months out, as Patrick says, I think to see it as a double from here is not crazy at all. Especially considering that from a bottom line perspective, which is what a lot of these financial institutions get tracked under, they're like tripling their bottom line. So,
yeah.
Can we talk about NBIS or CoreWeave? Yeah, I think we did.
46-minute mark.
Yep. Since SoFi is positioned both ways, do you think they are for or against the Clarity Act? If it gets passed, it removes many. They've flat out mentioned that they're for it. I'm pretty sure.
Yeah, and at least the way that I take Noto's responses on this, it's not that they're just for in the current form that blocks out all these other crypto parties from offering yield. I think just in general, Noto understands how important it is to the United States. And yeah, maybe it positions them a little bit more strongly if they box out a lot of the other crypto players from offering yield on stablecoin. But I don't think it makes a material difference for SoFi. So for
yeah, I think they're clearly for. Why is CNBC talking about the private sector so much than Blackstone? BX is Blackstone, right? Selling off today because of the private sector.
Yeah.
That is banks in trouble like 2008 is the rumors. So let me try to think about this. Blackstone owns a whole bunch of private sector assets. And it makes sense that they would sell off if the private sector is getting hit. Why would the private sector get hit? Probably as a result of some legislature. Maybe this has something to do with BlackRock not being able to buy more single-family homes. But
well, yeah, I mean, like there's two beyond the AI stuff, which is just weird and wrong. There's two bearish things. One is, of course, what's been happening with the conflict. We talked about that. The other is private equity, which goes beyond Blue Owl earlier this year. Like last year, we saw some concerns as well with like Tricolor, for instance. But yeah, I think that's what's hitting BlackRock. Not so much the being able to invest into homes like they have been. They even released a press statement. This was like a month or two ago, whenever this was going around, where they're like, hey, that like 1% of our portfolio is this type of. So.
Yeah, I'm not sure. I don't keep track of the private sector too much. So yeah, apparently Chris and Steve were talking about SLG yesterday. Redemptions are occurring. Blue Owl hit a low today. I'm not so up to date on that. particular vertical. Okay, let's move on. SPY has to fall 9%. I can't remember what this was in reference to. We were talking about another downturn.
I think maybe for reversal, that would be a correction. 10% down is correction. 20% down is actually a lot more than that. 30% is a bear market. So no, it's a crash. 20% is a bear market. So no, like not necessarily. The S&P actually has been holding up really well. There's a lot of people that are like, oh man, you guys that are losing a bunch of money on high beta growth stocks, just wait until the S&P 500 crashes or corrects down 10% or 20%. And yeah, it won't be like super pleasant holding those names either, but a lot of them, I see it like a Robinhood question a little bit later, have gone down 50% or even more. Like some of them are like extremely profitable companies that like NVIDIA is one of those where it's trading at like 23 times forward earnings.
Yeah.
Like I'm not too concerned about what those would look like, even in a, we may see a correction. Certainly in a midterm year, there's some seasonality as well that impacts once every 4 years. But yeah, it doesn't have to be to reverse. We've just seen a widening of the base in the rally.
Yeah, that's. I don't think this is going to happen. I mean, I hope it doesn't happen, but I don't think it's going to happen either. I know the chart looks scary when you zoom out. It looks like it's completely copy from a historical perspective, but like, it's funny. I was with a friend the other day, and he was like, "Oh, it's either SPY 8,000 or SPY 5,000." I was like, "What now? What is going on?" It's like it's not going to go to 5. Are you kidding me? But who knows?
Very unlikely.
Gemini uses history and everything in your drive to arguably better.
It's a really good product.
Yeah, I think I haven't logged into ChatGPT. Quite frankly, I haven't logged into ChatGPT in like since maybe August. Like not even once. I don't use it. I have a hotkey on my mouse for Gemini, and I have Claude on like one screen permanently open, and those are the only two that I use, and I don't use anything else right now. So I was actually speaking with someone yesterday, and they were still using ChatGPT, and I was like, "What are you doing?" And so everybody that I've talked to, I think it's like the third person now yesterday, I got them to move over from ChatGPT onto Gemini. And it's surprising, Roy, how many people have no idea about other LLMs.
It's crazy, yeah.
Like I got a call earlier today, and the question was like, "Hey, what was that other Google LLM you were talking about? The Google ChatGPT?" And I was like, "Gemini." And they're like, "Oh, okay, yeah, that's it." I'm like, what the fuck? Like, we are in echo chamber on X.
Oh, yes.
Okay, why would you want the government to settle for second best when trying to beat China in the AI war? Couldn't the government make some concessions? I think this is in reference to Anthropic saying no to the government.
Yeah, it would have to be done a certain way. So basically, like, okay, no surveillance. Okay, no auto targeting on AI. And it's weird because it seemed like OpenAI received those without an issue, and we're like, hey, do this for Anthropic too. So I'm not really sure what the hangup is. I think that the concern of the Pentagon, but you could put verbiage in there to figure out, even through this hoop, is if they're in the middle of a conflict and Anthropic's like, well, wait, no, we don't like what you did just there. We're going to remove it like mid battle, mid planning of some strategic operation. And obviously that can't happen. So there needs to be like basically something set up where, okay, we're not going to do these two things that you mentioned. Here's, the definition of those. Here's what those look like. And here is the means by which, if you think that we're violating this, that we can have an independent board, like actually look at this. And if this is the case, then this is the ramification. That way they don't have to worry about Anthropic like pulling the rug out from the mid operation, which obviously they can't do. But yeah, I don't want the government using any LLM for surveillance, which I don't think is happening, but it could very well happen. and likewise for auto targeting. I've seen too many science fiction movies and read too many books. Don't let AI pull the trigger. Ever.
Okay, I'll answer this question in just a second. Just some breaking news, not breaking, it was like 3 hours ago, but some breaking news to me because I just read it. This is the VP of research at OpenAI, decided to leave OpenAI, blah, 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 blah. Da, 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 da. I'm personally very excited for my next chapter. Proud to be joining Anthropic to get back into the weeds in RL research. And I'm looking forward to supporting my friends there at this important time. Many people I most trust and respect have joined Anthropic over the last couple of years, and I'm excited to work with them again. I have also been very impressed with Anthropic's talent, research, taste, and values, and I'm excited to be part of what the company does next. This is a VP at OpenAI, and this is going a little bit viral right now. Wild. I posted this, and I'm sure, Roy, you'll know exactly what this is.
Yeah. At
So-
Tu Brute.
Exactly. Crazy, man. So do you think this was as a result of Anthropic's decision, or do you think,
Yes.
yeah, you think so?
Yeah, I mean, it seems like it. She has that last paragraph, that wording. We've seen, like you showed that graph of lots of people downloading Claude and uninstalling ChatGPT. A lot of people, respect the stance. I think that there's a lot because there's like not enough overlap between the he said, she said type of thing. So there's obviously things that we don't know. But yeah, no, I respect the stance too. If Anthropic is being genuine in what that stance actually is. There's a little bit of weird stuff.
You know who this is, right?
No, some soccer player.
Anyways, we move on. We digress.
Who is it?
It's Luis Figo.
Okay,
Great soccer.
I don't know who that is.
Early 2000s. Yeah, he was a real one. I saw him live actually.
Cool.
Okay, back to this question. Okay, two things, Matthew, because I think it's a valid point that you're making. I think the first counter I would have is if you're getting so much backlash like this and like the downloads and like all of these other things, you kind of have to stop and ask yourself, like, all right, is it as clear cut and dry as the military is making it out to be? Because right now there's a lot of pushback around that decision. A lot of the ethical arguments are starting. And so first and foremost, it's not as black and white as your question makes it out to be. Second, it's not as dire as saying like, oh, well, if they can't do it, then China wins. Like you can just say that argument for everybody. Like, hey, if you don't give me all your money right now, China wins. Like it's not gonna the world is much more diverse than that. It doesn't operate in a vacuum. And I think that ultimately the fact that there's so much support, overwhelming support for Anthropic, I think should cast the seed of doubt in your mind as to who the good guys and who the bad guys are in this particular case. And I'm not saying I have a horse in this race or have an opinion as to who the good and the bad guys are. I can see both sides of the argument, but I'm saying it's more nuanced, and it's not like it's a fallacy to say like, oh, why would you want them to settle for, or would you want them to settle for second best? It's like, dude, China can mandate the best of the best, but do you want to live in that regime? Because if they can mandate the best of the best for this, they can do it for everything else, and you're going to give up a lot of your freedoms along the way. And so ultimately, it's like if you want to be in a system where you respect those freedoms, you also have to respect when those decisions don't go your way. That's just my 2 cents.
Yep.
All right. Anthropic took a stance, but Palantir is a wonderful company. Hypocrisy? Maybe.
I no, like Palantir a long time ago basically said, as far as the legality of things, they're going to leave that for legislators, United States government regulators, the courts. That obviously, if there's overseas implementations, there have been times when Palantir has pulled back and said, "No, you can't actually use a product this way." But for the most part, it doesn't mean that I agree with every single implementation that Palantir has been used in. Like in particular, something in Honduras where it's like, okay, that's actually not good at all. But end of the day, like Anthropic, OpenAI, very different tools in Palantir. Palantir, operationalizes them because of their platform, but they can be used for great good. They can be used for great harm and evil. Palantir, what they enable is essentially being able to have access to data that is able to talk to itself, but you only have access to that data if you're supposed to. So it makes sure that it's not just out there, not like mass surveillance or anything. There are a lot of solutions proposed in the aftermath of the Patriot Act and the extension of that as well, which were much worse in terms of civil liberties. So, I mean, like Peter Thiel, Alex Karp, like they agree on very strong civil liberties, but also protect that. You need to have the government to be able to effectively prevent mass casualties from warfare and mass casualties at the hands of a terrorist too. There's a lot more than that than the Palantir does, but yeah, this is a far cry from surveillance. They can't. I mean, like Palantir can't do that. LLMs potentially can, but yeah, I don't have an issue. I don't see it as hypocrisy.
Can I actually, because I've been wanting to talk about this topic all night, and segue us into this topic, because there's been a whole bunch of conversation around the Anthropic decision, and I think it muddies the lines a little bit around modern day companies and the dependence on them in geopolitical events. And this was, I think, by far for me the wildest story this week that we haven't talked about. So Leia here says the U.S. has used Claude AI to strike Iran. Of course, the U.S. has a 6-month period where they have to offboard. Then Iran retaliated by striking an AWS data center. Claude runs on AWS. We've officially crossed into a new era where all of these companies now are subject to collateral damage, let's say, targeted collateral damage. And then I want to walk you through this thread. Grok fact check, where is the AWS data center located? So Grok says, yes, this is accurate. The US military used Anthropic's Claude AI for intel, target selection, simulation, so on and so forth. Iran retaliated with drone strikes hitting AWS data centers, 2 directly in the UAE, 1 in Bahrain, disrupting services. Those facilities are in the UAE, Middle East Central, I guess, 1 region, and Bahrain. Were they in US bases stationed in those countries or something? No, AWS data centers are not located on US military bases. The facilities are in commercial industrial zone near Dubai and Abu Dhabi. Bahrain is in the Manama area, damaged by a strike in close proximity to the naval base, but separate civilian infrastructure. Iran targeted bases plus other Gulf sites in retaliation. So you could play you could play it dumb to say like, oh, well, just so happened that they weren't targeted. It's just collateral damage because they're in the sector or whatever. Or you could say like, wait a minute, these are civilian buildings that are now being targeted as a pretty sophisticated chess move to hinder the ability of intelligence or whatnot.
And there's multiple ways where that sort of thing is going on. Now, this isn't related to Anthropic specifically, but it wouldn't surprise me if some of the data center protests, not all, and I think probably not most, and there's legitimate reasons why people would not want to have that in their backyard. But some of it is like, hey, let's slow down the US here. So this is one that, and you can read this not just on Fox News, but a lot of other news agencies as well from yesterday. Network funded by pro-CCP tech tycoon targets Palantir amid anti-US protests that support the regime in Iran. And so, like, if you have support for the regime of Iran, and pro-CCP and anti-America protests. Like, it tells you all you really need to know about Palantir. And I think Alex Karp put it this way when he's asked like how effective Palantir is, especially in the battlefield. It's like, ask our enemies, see what they say, see how they treat us, see what they do. I wouldn't surprise me if we also see some attempts at that too with Anthropic, just to further widen the gap between what's happening with the United States government and Anthropic, maybe data centers as well. But yeah, it's when you just lag as far as the tech advantage, but the complexity of that, not exactly supply chain, but it's vulnerable. So it'll be interesting to see where further strikes are. Hopefully not too much longer, but
it's really interesting because it reminds me of like those science fiction movies where like companies hire their own private army, and like, the Dunes and the different like science fiction anthologies or trilogies or whatever they're called, parallel universes. And it's like, dude, are we going towards that type of world? Because like, if you think about it, like these like Amazon, for example, and let me read this. U.S. military doesn't use commercial data centers. They use air gap data centers in Virginia and Ohio. Sure, I get that. But I don't think the other side is thinking about it from that sophisticated point of view. I mean, that they were just sort of, they hit the palm in the Jumeirah Palm or whatever in Dubai. And so I think in a world of further consolidation across multiple verticals for the hyperscalers, there will be instances like this where, like, I know Claude was having some outages, probably unrelated to this, yesterday, but it's just like Amazon is catching strays here because of their association, because of their deals. OpenAI is catching strays because of their decision to partner with the government, let's say. And it's just so crazy, man, because it muddies the line around what is like a business decision with an ethical decision with something that has like real world repercussions. Like, I don't know. I was shocked at that. And like, I wasn't shocked when it happened the first time because I was like, oh man, that's really unfortunate. But then they did it 2 more times. I was like, wait a minute, this is not like they're actually targeting these sites. And if I felt that way, it's just like other Amazon investors are like, wait, like what the heck's going on? Like, why are you targeting our company? Anyway, it's just a little bit crazy.
All right, rapid fire.
Has HOOD bottomed?
I don't think crypto winter is over quite yet. Clarity Act rather is being signed, marks it coming to an end fairly soon, but that hasn't happened yet. So I think probably not.
I'll take the other side. I'll say yes. Is it worth doing covered calls or cash secured puts if you only have 100 to 200 shares or something? It really depends on your goals. If your goal is to cash flow and you're not afraid to lose those shares, then go for it. If you're like, hey, I want to hold these shares for the long term, regardless of what happens, then just know the risks.
Yeah. And if you are like, hey, I want to do covered calls, I want to learn it, don't think that your account size really matters. Like, it does, just because you're limited on how much you can do. But basically what I'm trying to say is whatever investment style is working for you, if it's working when you have $10,000 in your account, those good habits that you learn will translate into more success when your account is $100,000 or $1 million.
Roy, are you selling covered calls on VG or trading around a core position?
It's too volatile right now, which I know normally volatility you want to really enjoy. I did have some into earnings. No, I actually didn't. I retracted those. So yeah, I just have leaps and I have shares, and I've not sold any yet. I was actually looking at it this morning when we had that big spike earlier, but in the current environment with what's happening with Qatar, like if that persists longer, I hope it doesn't, but if it does, like we could see VG in the 20s, especially with another good ARB ruling.
What do y'all think of Steven's assessment of SoFi as a bank with an expensive price to book valuation coming from a fellow SoFi shareholder? Personally, I disagree with the assumption.
I think Steve is not saying it should be valued as price to book, but he's saying that that's what's happening and why it's going down. I think he's wrong on that thesis as well. I think instead, just a lot of high beta, high growth names like Robinhood in the fintech space, like pretty much every other fintech, is getting sold off. And it's doing this at the time where SoFi is a little bit still in the banking bucket, but also I think it's broken out into fintech or broader tech as well. That's why we saw it have that high back like 4 months ago now. So
Any interest in Circle? Are they basically a duopoly with Tether, USDT and USDC?
I mean, like I'm interested just in the company itself. I've said it before and I'll say it again. I would rather own Coinbase than Circle. If you look at the revenue sharing agreement that they have between the two, if you're bullish on USDC, there's no reason to pick Circle over Coinbase. I mean, honestly, there's a couple, but very few. Coinbase gets more than 50% of the revenue from USDC.
Wow, I didn't know
Yeah, they have a revenue sharing agreement where 100% of the revenue, I believe, that's used within the Coinbase ecosystem, which is a lot of the implementation of USDC, goes to Coinbase. You have a revenue sharing agreement beyond that outside of Coinbase. And I don't remember what the split is. I think it's 50%, but somebody can double check that. It's been a while since I looked at this, like when Circle was IPOing. And then they own stake directly in Circle, which I don't believe they've exited. It's like 9 or 11%. So they actually get more revenue from USDC than Circle, who owns it. So there are other things that Circle does, but I don't know, like why invest in them versus just Coinbase? There are some answers, but yeah.
And Roy, I don't know if you heard this, and not to change the topic, but Coinbase did announce this past week, that they are getting into stock trading as well.
Yeah, they've signaled that for a little while. Even like there's a lot of companies that I think will try to do that. I just don't think. I think they'll have about as much success as Robinhood has as far as volume in the tokenization sphere in Europe. There's just not enough reason for people to actually do that. So could be wrong. But yeah, they have interesting things that they're building.
What do you think of SMCI?
I've never really liked it. They've had they're in the right space. They should profit materially, but their leadership, there's been some sketchy things, several different sketchy things. Auditing, I know there's been both sides of that whole story, but it's been an overhang on SMCI, and at least when there is questions on fraud or things that maybe might not be legally defined as fraud, but it's sketchy. I don't invest in those. There's way easier investments out there. But that's just how I play it.
What has more upside by the end of the year, BM&R or SoFi? Wow. Maybe BM&R, I would say.
I'll say SoFi. Crypto winner. I think it resolves by the end of this year, but I don't know that we'll see as much of a reversal as SoFi.
Yeah, I think it's much easier for BM&R to double. I think ETH was at 4,000, very, very easily. For SoFi to double, like SoFi's never been to $40 before. So I think it's probably easier for SoFi to get back to all-time highs, but I think it's going to be easier for BM&R to double, just because I don't think ETH at 4,000 is like a crazy thing. Like if we were to see it magically tomorrow, like, it wouldn't be like, oh my God, like this is, So anyways, would your tech stack change if your application scale? Oh, I think he's talking about Paper Panda. Yeah, I think if it scaled a lot, I would probably move from Supabase to AWS, and then I would figure out how to do deployments differently. Thankfully, I haven't had those to cross that bridge just yet, but they're good problems to have if it actually does scale. Right now, we're getting about 250, 300 users daily. So we'll see where we go from there. Honestly, it's only 2 weeks old. The website, two and a half. What are the best LNG stocks to invest in on TSX, the Toronto Stock Exchange? I think VG is on TSX as well.
I don't know that exchange at all. So, but yeah, in this space, I like VG. I mean, that's the only one I'm invested in. But I think LNG themselves, like every single one of the LNG plays should benefit from the same thing. But I think VG is very interesting in the way that they're doing the vertical integration.
Yeah.
Yeah.
Why not accept a bond for payment? What's the difference? I don't know what this is in reference to.
No
Maybe
idea.
the CoreWeave stuff. I don't know. 730.
Yeah, I think CoreWeave. I'd read from their earnings, 25% of the revenue is just going to interest that they owe on the debt. I don't think it's
really.
Yeah, it's not. I much prefer NBIS. I really do. But the other factor too is guidance, that they actually lowered guidance. So it's like I think they're going to be a beneficiary from the same thing that's happening with NBIS. But yeah, NBIS long, CoreWeave no.
Yeah. I'm not sure how hard this suggestion would be, but are you able to track what retail YouTubers are suggesting to buy on Paper Panda? It's harder than it looks to track because there's no way to do it through an automated fashion. I would have to basically like be in the know for what everybody is buying and selling. One update that is going to be coming soon, though, is I'm going to be creating a column on the retail page and a filter to have like common tickers that these guys talk about. So that, for example, it's going to say Roy and it's going to say AEHR, FIGR, Hood, SoFi, whatever, maybe even PayPal in there, and not PayPal. And so you basically will have an idea of like, hey, this is the content creator that talks about this stuff. And then I'm going to be linking their stuff to that particular stock page. So if you go on, the Robinhood, let's say, and you go on sentiment, it's going to say, here's some videos that Roy's made on Robinhood, that Tanner's made on Robinhood. These are the guys to follow for Robinhood, So I don't know. There is chaos happening on Tanner's and Steve's attempted live stream.
Thank you for the donation, though.
Huh. This might be interesting.
Yeah,
I'll look into this. Thank you. This might be a Fiesta Friday question. How did you come up with the name Paper Panda? Yeah, maybe let's say that I think I answered this on the last Fiesta Friday. It's basically like the domain was available and I just picked it because it just sounded pretty random, and this is a random project, so doesn't mean anything. Saudi Arabia promised to invest in AI data centers. Was geopolitical risks priced in for AI data center plays? Yeah, I think we just talked about this with regards to the Amazon stuff. Unless, Roy, you have anything else to add on the...
No, I don't.
Yeah. So I don't know if it is priced in or not, but it's definitely a real risk, especially after what we've seen with Amazon. I think they will become a case study in this new age of, geopolitical events. Do you think the stock market would have performed better under a more conventional, neutral president than it has under a high volatility environment of the Trump administration?
Probably about the same, but like differently. One thing, like the markets really like stability and they love gridlock. I was actually kind of hoping the outcome of the election was that the Republicans wouldn't win all of both house, the House and the Senate and the presidency. 2 out of 3 would have been my preferred outcome. Markets love gridlock. That's one of the reasons why mid-election year cycles are usually bearish until after November's election date, sometimes a little bit before too, depending on how polls are looking. So he's added a lot of regulatory clarity with things like crypto, with things that have not happened under the SEC that should have, DTCC as well. that paved the way for the future, AI stuff as well. But man, you never know what you're getting. Like it's just like Venezuela and Iran and tariffs and no tariffs and then tariffs again and Supreme Court. It's just like it's tough. So I probably similar.
Yeah, I would say like the fact that it's unpredictable makes it sell off in the market because you're never truly calm in what you're holding, or I guess the market isn't. I think I don't know who a more conventional pick would have been, because like the alternative pick would have been just as uh, volatile, let's say, just in another direction. I don't like the thing that I think Trump adds in addition is that he just says uh, screw it, and he just does way more sort of executive orders to without congressional approval, and that I think adds a whole bunch of extra drama into the markets, because all of a sudden it's like, oh, well, Supreme Court has to rule on this, and they've already been operating in this way, and it just undermines the entire sort of system that the U.S. has with regards to how things get done, and that adds more uncertainty into the market, and the market doesn't like uncertainty. Has the SPY ever had such a stark rotation out of one? Oh, the S&P 500. I was like, what's SPY?
Throw this up real quick, and we'll take a look. I saw the question, so I prepared just to pull this up. This is actually healthy. You see a whole bunch of names. We're at close to 200 that have gained double digits year to date in 2 months. Of course, there's a lot that have lost. If you look at it on the year, it's actually down a little bit. But you don't want to really see what happened in 2023, which is like 11 names basically provided almost all the gains in the S&P 500. You want a broadening out of the rally. This is one of the things that actually long-term helps that SPY trend remain intact, is a broadening out of the rally. It's not fun when it rotates away from your sector into the Walmarts of the world and the Crocs of the world, and you're not holding those. And it's like, why are you doing this, market? But no, it's healthy. And then, if we see a reversal from the overhang, so the perception of what's happening with AI, the double-edged sword, software, and even this conflict type of stuff and private equity, not all of those necessarily, but some of those reverse, we could see a lot of those high beta names that have underperformed actually reverse. And that's where we see the outperformance in the S&P 500. So yes, we've seen this before historically. Sector rotation happens all the time. This has been pretty aggressive, but yeah, it's not abnormal as far as historically.
Yeah. Steve here says, if AI is so intelligent, why isn't everyone trading solely on these recommendations? I look at them every day, and a lot of what they recommend would cause bad results. AI has its place. I think, Steve, the more impressive thing about AI, even if you're not impressed with the results it gives you, is the pace of the intelligence improvement it has in such a short time span. Because people, especially people who invest in, public markets, have the ability to zoom out and look at the future and try to project out what is this going to develop into. And so for me, like if Claude Code, does this much for me today, I had this conversation with one of my developers, and he was sort of laughing. He was like, well, yeah, it's cute. It's like a toy. And I'm like, okay, it's a toy today, but there's only a finite amount of time when you can say that. At some point, it's going to be just as good as the human developer. And at some point, it's going to be way better than a human developer. And at some point, it might be way better than all human developers. And it's just like, and all those 3 points are going to happen within the next, couple of years. And I think that's the crazy thing. It's like, yeah, AI is intelligent and people are using it for trading, but like, imagine how much more intelligent it's going to be 6 months, 12 months, 18 months from now.
Yeah. And like probably some will be successful trading, but I think a lot won't. We say that, and Gemini is probably still destroying us in that competition. But one of the things that it's really good at that I use it quite a bit for is, and you don't have to use, this is just Fiscal AI's thing, but you can just go to ChatGPT or Perplexity or Gemini, and it'll do the same thing if you ask it to. Just an AI generated report, like to just kind of prime your own due diligence. Don't stop here. But oftentimes, when I'm like, okay, I've never heard of that ticker, or I see something that looks interesting, I will start here. Morningstar report's also very good, but it just goes down. What's the bull case? What's the bear case? With the numbers, recent developments, which is really important, moats, lots of charts and graphs, and it generated this in like 20 seconds. And it's not, Physical AI is a great platform, but like what they're doing here is not like, oh, they're the only ones that can do this. It's LLM. So yeah, it's really interesting to see it immediately put this together and then just simplify. So yeah, it's great at that. It's also really nice for me to like look at things that I perhaps miss, or like, is there any other material updates for investors on this or that name? It's a lot better than a Google search at this point. So
yeah. Why haven't you guys had money on the show? We have had him. He's always welcome on the show. All right. Enough of these Matt paid protesters.
Matthew is just biased because Matt and Matthew.
Yeah, his name is also Matt. Harry says AMD or NVIDIA over the next 12 months, best risk reward, or both 60-40. Honestly, man, I think NVIDIA is like super disrespected here, and I think it definitely deserves to be trading much higher.
Yeah, I prefer NVIDIA. AMD can have the higher upside. Both should do well, but yeah, NVIDIA is just cheap, and you get Jensen Huang.
Mm-hmm. You definitely do. It's the best in the space. Why is air so volatile? Because it's tiny. It's like
microcap, low liquidity. Yep. And you'll oftentimes in those massive candles where it's going up 10, 15%, you have traders playing it. So you're going to also have a lot of volatility on both sides when they take profits. So I've actually been surprised. Like it doesn't like to dip for long. It's pretty crazy.
Yeah. If BMR has another investor day, would you guys go for the free Mr. Beast chocolate? Mr. Beast does have good chocolate bar, but I don't know if I would go. I don't know.
I probably wouldn't go.
Yeah. What stock that you currently hold are you most worried about? Roy, you want to go first?
None of them. The two entering the year that I was PayPal, which I'm out of, and because I think the thesis broke, and also HIMS, which had a lot of yellow flags. I was looking at it closely, thought I might exit. I did exit. So there's no stocks that I hold that I'm concerned of.
Yeah, I would say like of all of them, of course, air is definitely one because I don't know enough about it, but it's like it doesn't even count. It's like 0.5%.
Yeah, sizing matters.
Yeah, I would say like NBIS is probably the one that I'm like most worried about. Not necessarily worried in a bad way, like I'm going to sell it. It's my second largest position. I'm super bullish, obviously, but like it does depend so much on execution risk. That's always around the corner. Of course, if things go wrong, if the demand falls off a cliff, or if any of these things that have a very low probability of happening happen, then NBIS is going to be hurt. It's not like Amazon or Meta that like they can afford to have a couple of bad years, and who cares? It's still Amazon and Meta. Like these guys are still relatively small, and they're only being held up right now by their growth rate. And if their growth rate falls in any way, then I think they're definitely going to be hurt by that.
Yeah.
Have you purchased any leaps recently?
Nope.
No. Roy, you can't bring up Fiscal AI because I don't have the sponsorship yet. Have they reached out? They have not reached out. And honestly, if they don't reach out in the next week, I'm going to vibe code them off this earth. I'm just kidding. Please reach out. How long are you guys holding NBIS?
It's probably a 5-year play, but we're going to see how the execution, like it's a neo cloud. So if as they move significantly further than the bare metal product line, then it's a credible neo cloud that looks like it has a durable moat, even when hyperscales get past this digesting of this capex acceleration. Then I may be in it for longer as well. But yeah, 5 years.
Yeah. I would agree to that. 3 to 5 years, I would say. We're still in the build out phase, and I think once we get built out by the end of 26 and into 27, I think the market is going to start to price them in much more fairly than they are right now, because a lot of that execution risk of the build out goes away, and you actually have a very much clearer path to that revenue.
And the market's just bad at like figuring out NBIS right now, because it's they have offerings like this with CoreWeave and them, and anywhere else it's always in context of a business that's around it. So like the estimates that we have are always like way off for analysts, and at some point they'll be like, oh, okay, we were doing this wrong. They'll get it. That'll make more sense. But yeah, a lot of buildup. That I think that they might hit profitability a little bit later than expected. So maybe 2028 instead of 2027. But I want to hold it in and through early profitability, probably. Now, if they go up, like obviously with any position, if they like tripled overnight for whatever reason, I'd be like, all right, thank you, NBIS. Bye.
Yeah. Our favorite residing Canadian head over to Steve's stream and replace Tanner. I don't know what's going on in Tanner's and Steve. Apparently drama. Also, Jesse asks who you got in the BMF fight. I have Holloway all the way, and that's going to be an interesting one. I don't know if I'm going to be able to watch it from where I'm going to be at, but hopefully I will, and it's going to be a good match. Which of NBIS's other businesses beside data centers would be the next one to take off? Learning starts with T, Toloka, or Avride?
Yeah, I don't know Toloka enough. Avride, I think, is more niche. I would just say more ClickHouse. Like that is a business that's growing rapidly. They own a large stake.
I think in the next 2 years they sell ClickHouse.
Can you say it again?
I think in the next 2 years they sell ClickHouse entirely.
Oh, they will at some point. Yeah, they own those. They've benefited like ridiculously, but rather than like that's an easy way to get some extra capital and build things out faster. So
yeah. All right. Shall we wrap there?
Sounds good.
Thank you, everybody. 2.5 hour bootleg weekly stream. Thank you so much for being here and spending your evening with us. We really appreciate it. And we will be back on Friday. That's going to be a fun show because I'm going to be streaming from another country, and we'll see how the internet holds up. And that's it. Enjoy your Tuesday, and we'll see you on Friday for Ron and Travis show. Goodbye.
Thanks, guys.